Morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw, Senior Market Specialist at FXCM, and my email address, rshort@fxcm.com. Today being Tuesday, it's the 18th of Jan 2022. Apologies, slightly late. I just was writing an article and lost track of time, so I beg your pardon. I'm just going to bring up the high risk investment warning, and I'll keep this on screen for a few moments. Hey Katie, good morning to you, and nice to have you on the webinar as always. And thank you everyone for joining, much appreciated. All right, let's just bring up the market commentaries disclaimer as well. I'll keep this on screen for a few moments. And the references here, FXCM Market Scope 2.0. I am going to also just go through the CNBC morning note. So we'll do that just to understand the if there's any media sort of, or let me rephrase, if there's any calendar events or newsworthy items we need to be aware of. So let's go ahead. I'll bring up the chart. I'm going to just change this up to DAX, and let's go through the headlines, and then we'll do some analysis. So the CNBC morning note reads: European stocks set to fall slightly as markets mull the Fed and earnings. European stocks are set to open fractionally lower today as global investors remain attuned to the policy direction of the US Federal Reserve and the start of corporate earnings season. Global markets have been focused of late on assessing the potential speed and trajectory at which the Fed will move to hike interest rates and tighten its ultra-loose pandemic-era monetary policy. Meanwhile, corporate earnings are beginning to roll out for the fourth quarter. We're going to have Goldman Sachs, PNC Financial among the big names reporting today. Bank of America, United Health, and Netflix are also due to report later in the week. I think Netflix is on Thursday. US stock futures were slightly lower in early pre-market trading on Tuesday as investors braced for the latest batch of earnings, and this was after yesterday's public holiday celebrating Martin Luther King Day. Shares in Asia Pacific lost momentum on Tuesday to raise earlier gains. The Bank of Japan left its short-term interest rate target unchanged. Yeah, that's pretty much in line with what the market expected. Back in Europe, the Economic and Financial Affairs Council is meeting in Brussels on Tuesday. The meeting comes a day after German Chancellor Olaf Scholz and Spanish Prime Minister Pedro Sanchez vowed to work closer together on continental policies despite divergence over the relaxation of EU fiscal rules. We just got two more paragraphs here, and then we'll get into the analysis. I should have also put trading view. I think we'll need to use trading view on this webinar as well. So it wasn't in our references, but I'll point it out when I bring it up. On the data front, the latest ZEW economic sentiment survey is due for Germany and the Eurozone on Tuesday morning. Earnings in Europe come from British miner BHP. Oil prices surged during the Asian trading session, with Brent crude touching a more than 7-year high amid concerns over potential supply disruptions. And this is following Middle East escalations. There was an attack by the Houthi rebel group in Abu Dhabi, and I've actually read since then that the Saudi-led coalition has actually retaliated. So there's an escalation, and oil prices seem to be supported and appreciating. That's what my article was on actually. So if we go back to the UK oil, which is our proxy for Brent, this is now on FXCM Insights, and this is the weekly chart. You can see that we've got a higher trough followed by a higher peak. So that's the classical definition, right, of a an uptrend. But if you put on the triple moving averages just to measure the momentum, well, they've all lined up initially. So you've got green on top of orange, orange on top of red. There's good separation there, and this orange intermediate is starting to turn up. So it's certainly, I think, a chart to keep an eye on. If we go down to just the hourly here, we're overbought on the short term. So just be aware that most of the action took place in the Asian session. Coming into the European session, well, it's probably worth seeing if there's a better risk-adjusted entry on a pullback. So definitely worth mentioning oil. It is on the move. But let's just go ahead and bring up the DAX. All right, let's start off with the chart over here. I'm still finding this this chart very difficult to really interpret, I guess, or make some sort of inferences from. In terms of trend, I mean, we can make inferences, but in terms of trend direction, it's difficult. The inference here is uncertainty more than anything. So what we have done previously is we have combined this candle with last week's candle. So the candle from 2 weeks back with last week's candle, we've combined those two candles previously. We'll do it again for now because I think it's quite informative. So you take the range of the two candles. So this is the high, that's the low. Kind of. Let's just push this up. There's the low. So this range is for two candles, and then we'll take the open for the two candles. The open must be the open for the first candle, which would be kind of there. And then we'll have to take the close for the two candles, which would be the close for the second candle, which is kind of there as well, isn't it? Let's just make this a bit neater. There we go. So you can see it's a long-legged doji, right? The last 2 weeks on the DAX is a long-legged doji, which is a candle of uncertainty. We've been talking about this now for a number of days. It's still very much, I think, a part of the course, so to speak, because if we have to jump through to this week's candle, well, it's we've had 1/5 of trading. Of course, it lacked liquidity because of the long weekend in the US. So perhaps we'll get something different out of it from today. But right now, this is an inside candle. With four trading days still left. It's an inside candle. So we've got a long-legged doji, okay, long-legged doji when we combine these, and then inside candle. What's an inside candle? Well, inside candle, another candle of uncertainty. It's the bull's not taking any sort of steps to push price up. But the bear is not really having any control either because they trading well within this range. What we can do now is just update these two candles. Let's update the combination from last week's and the week before's to this week's and last week's, and see if there's anything that we can assess. I'm suspecting it's going to be similar conclusions, but let's just do it. So here's the high, here's the low so you can see that the range for this week is completely inside last week. So the range would be like this until this week's candle either makes a high or a low. And we'll take the close, which would be, I beg your pardon, we'll take the open, which must be the first week, which is last week's open, which is over here. Let's put this in around about there. And the current close, which is, we've got to be careful because this is still an active candle. So it's only going to effectively close at the end of the week. But right now, as you and I are discussing, you can see that we're kind of about there, right? So what have we got here? Okay, I'm going to make it, I'll turn it into a candle because I think people are more comfortable with candles. You'll have what's called a spinning top. Kind of like that, spinning top, and it's a closed spinning top, which I don't think makes all that much difference because the difference is not particularly large between open and closed. But you can see it's what's the spinning top? It's another candle. It's another candle of uncertainty, isn't it? So last week when we combined the two candles, uncertainty. This week when we combine the next two candles, uncertainty. That's the environment we are in. I wanted to change. I think we all wanted to change because this is the big takeaway. This is the big takeaway. Okay, and I'll put it in caps. Uncertainty equals risk. Okay, in financial markets, that's the key. Uncertainty equals risk. So if we are participating in an uncertain environment, well, then it's a risk environment. Now, there's always an element of uncertainty in the markets, because even if you're in a swing, how long is that swing going to continue up or down? But this is, in my opinion, heightened uncertainty because we've got no directional bias at the moment. And that means that you must understand it's a risky environment. Risk is a real variable. It can hurt trading accounts. So everyone must use stop losses. You need to use stop losses regardless, but this seems to be a more intense environment in terms of uncertainty, and risk management is very important here. If we go through to our daily chart here, the spot market's just opened, so my system's just hanging. Just give me 2 moments, and we should. All right. Shouldn't take too long just to normalize. It's taking longer than there we go. Took longer than normal. Okay, here's the daily chart, and in the daily we just break it down into zones. You know, where we're trading in terms of the zones. If we're in zone 1, just very simply, that's where we want to be if we want to go long. Zone 3, which would be down here, would be where we want to be if we want to go short. What's zone 2? Zone 2 is it's no man's land. This is uncertain. Which way are we going to go? So we stuck in this no man's land in zone 2 as well. Now, but before we go down to the hourly, it's worth just saying, you know, in environments where there's high risk, well, the potential for high reward exists. So, in other words, we could, if the market falls into zone 3 and you short, well, you know, that's going to be profitable. If it shoots up into zone 1, that's going to be profitable. But of course, it's an asymmetrical relationship. If you short and it goes into and it shoots up, that's going to sting. Okay, and if you are long and it falls down, that's going to sting. So the prospect of high risk, high reward is certainly present, but don't discount the high risk. If we go down to the H1, well, it's not looking particularly good, is it? There is a market movement that's heading towards S2. I don't know if this S2 is going to hold or not. I think the first hour is going to be needed to get some sort of sense of that. But at the moment, we do have a bearish bias, and that's different to yesterday, because yesterday when we opened, we had a bullish bias, but we have gone nowhere. We've gone sideways. And in fact, this is the whole point of high risk, high return, right? Because you can be taking a knock here. So I think I'm going to move on to Bitcoin in a moment. But before we move on to Bitcoin, just remember that you know, not having a position is still a position. You've got to understand how comfortable are you with trading. You ask yourself, is the reward I'm going to earn worth the risk I'm about to assume? So some people are risk takers, some people are more averse to taking risk, and I think you base your decisions on that. Yeah, no worries, Howard. No worries. All right. And Pete's just saying, yeah, he's looking at other markets, which is, you know, the DAX does seem a very difficult market. One of the reasons for that, by the way, we won't get into it too much, we did touch on it last week, is I think that the market is trying to determine what kind of adjustments need to be made in a higher rate environment. I think that's really an important conversation to have. I think maybe we'll try to tackle that tomorrow. Yes, Kobus asking if we're going to carry on with the webinars. There is FXCM ZA is, I think, being merged into FXCM UK. Yeah, the webinars continue as normal, Kobus. Okay, Katie is asking for NASDAQ and S&P. Yeah, absolutely. Okay, we'll do that as well. Let's just go through Bitcoin. I think it's also a fascinating sort of chart, and I'm going to bring up trading views. So this is where I should have put trading view for in the references. So sorry about that. Let me just bring up trading view. Okay, here it is. Sorry, it took, again, my PC's on it, go slow as well. All right, before we move on, what we have here is the US 10-year. I think it's worth just showing this. All right, so just taking a okay, so here's the 5-year. So you can see that we have broken out of a inverse head and shoulders. What you can do is, and this, what I'm about to show you is sort of very, I think, controversial. I think you can take the measurement from the head to the neckline, you do a measured move, and it gives you a potential target of 3%. So the obvious, why is it controversial? Because, well, the obvious question is, well, who says it's going to 3%? It's impossible to tell the future, which I'm a firm believer of. There's no ways anybody can make accurate forecasts consistently. So the idea here is the measured move on the head and shoulders says we're going to 3%. It might be sensical. It might be sensical. I'm not certain, but the point, I think the point to take away from this is not really the measured move, but the fact that rates are heading higher. And you don't even need the measured move for that. There's kind of trough, peak, higher trough, higher peak. And this, I think, is putting the pressure on, say, the DAX, the environment is, well, with these higher rates, what's going to happen to the risk side of the market? And when we go into Bitcoin, this is actually a factor in the analysis of Bitcoin. We're in a higher rate environment. It makes a tremendous difference for everything. For you and me that want to purchase on our credit card, okay, that makes a difference. If we want to take out any sort of financing, you know, we're in a rate hike environment. It's very different to an environment where rates are coming down, and we potentially in an aggressive rate hike environment because inflation is very aggressive at the moment. So this is just something to keep an eye on. Again, you know, it would be very nice if the chart hit 3%. When I say nice, not from a cost point of view, nice because aha, look, I told you so. We're hitting 3%, but that would just be pure luck. You know, it wouldn't mean anything. It sometimes hits the target, sometimes it doesn't. All right, let's just go into Bitcoin. I'm going to do the analysis of Bitcoin, I think, on TradingView, because I want to bring up potentially maybe the interest rates, potentially dollar. Okay, we'll just use the TradingView index here. And I just want to change this to logarithmic because looking at a longer term chart, it's best to use logarithmic. You don't have to use logarithmic if you're looking at very short time frames, but with longer term time frames, you actually do need to use logarithmic because it takes into account the percentage change as opposed to price change. Just to give you an idea, a movement from $1 to $2 is 100%. A movement of $10 to $11, although it's also a $1 change, that's only 1%. Okay, logarithmic makes adjustments for that. Arithmetic scale doesn't. All right, let's take this out. Take this out. Well, what's happening with Bitcoin, and it's a terribly, I think it's a terribly difficult instrument to analyze because of just the sheer amount of emotion that's attached to cryptos. Either I think somebody is a supporter or somebody is you know, really hates it. Very few people I know are kind of in the middle. So just the fact of the emotional aspect, it makes the analysis much more subjective than it should be. In that vein, I'm trying to keep it as objective as possible. To do that, let's put in some moving averages here, so we can use those as perhaps an objective measure of what's going on. So we'll just do. Okay, so we'll click this button here. So we're going to put on a triple moving average system. We're going to be using simples. So we'll use even the slower moving average. Let's put in 3. 1, 2, 3. Okay. And what I'm going to use here is I just tend to use a 5, 13, 34. I want to stress again, there's no advantage to using those numbers. The system that you know, that I learned it from comes from a terrific, a legend of the market in Australia, a lady by the name of Dawn Bolton-Smith, who unfortunately is no longer with us, and she used a 5, 15, 30, I think. I just changed it to 5, 13, 34 because they fit numbers. No real sort of magic any which way. So let's just go here. And clearly there is subjectivity to the analysis because I'm choosing these, but I'm consistent. I've been using these for a number of years. I don't change these. All right, so just putting the 5 there. I make the 13 orange. And what's wrong here? It needs to be thicker. Something's already looking a bit weird to me, but that doesn't matter, right? Let's just put this in 34. I know that's better. Okay, beg your pardon. Yeah, all right. Yes, that's all right. No, it's looking good. So what we're trying to do here with the triple moving average is effectively use it as a trend following indicator. You can't use moving averages for much else. They are designed to be trend following. They're always going to be late, by the way. Okay, but if there's a strong trend, it doesn't really make a difference if there's a strong trend. If it's not such a strong trend, then it makes a difference. But the idea here is you're just using this as a trend following tool on the weekly. So it's really not much use except for analysis. Using sort of triple moving averages on a weekly, it's going to give very late signals. But in terms of analysis, what have we got here? Well, we've got a crack. Okay, we've got a crack in Bitcoin. Where's the crack? It's over here. Okay, I just want to change the color because just make it sort of a aqua turquoise. All right, so you can see we've got the green 5, which is the fast. We've got the green fast. So the green fast has taken out the 13 intermediate. It's also taken out the slow red. So green has now moved to the front. So when you've got the green taking the lead, followed by intermediate, and then the slow red coming up behind, well, that is the sign of trend. So we've got the first step here, whereas the green now has dropped below the red. The next sort of part of the evolution would be the orange moving below the red. So if orange moves below red, well, then we've got what we call a bearish formation. Now, remember, this is an analytical tool. If we go back, there's a very strong trend over here where we've got green taking the lead up, followed by orange, and then right in the back, we've got red. There's good angle, there's good separation, and that is a movement up. The uptrend effectively ends here because we move out of that bullish formation. Okay, so now we're looking to see, well, do we get a bearish formation over here? In other words, does green take the lead down? Does orange come up second, and then red? So we don't have the orange in compliance yet, but the first crack is there. So we just want to keep an eye on that. What I think is very important in terms of the analysis, not so much from a technical point of view, but from a fundamental point of view, is and we've mentioned this before, is the direction of the dollar. And if we have to bring up the dollar underneath, I think that adds a certain amount of insight. And I think that if the dollar sort of shows some sort of strength up here, it's going to add a complication to Bitcoin holders. Why would I say that? We have to go out a bit more. To this period here. Okay, so really looking from the pandemic period, because I think the pandemic has caused a lot of disruptions in the flow of funds and allocation of assets. But so the start of the pandemic period, we'll just put it this is where the QE starts. We've mentioned this many times previously, where the dollar just gets flattened, because it has to get flattened because there's so much dollar that is starting to circulate in the system, that if you are holding dollars, you'd be quite desperate to preserve your your wealth, or perhaps just your the value of your assets. So you look at the areas to rotate into, and I think Bitcoin was a direct beneficiary of that. I think Bitcoin was one of those. You can see as the dollar starts moving up, Bitcoin now just can't keep at pace. It's flattened, and there's now a real risk of moving into this bearish formation here. And if we get angle and separation on that, well then, gee, how far down do we go? How far down do we go? And the idea here is, of course, nobody knows. Nobody knows. People can forecast, okay, where Bitcoin is going to go. Nobody knows. It could go to, let's just say here, this is 28,000, which seems to be a logical, 28.9 seems to be a logical support. But if that holds, and the angle and separation carry on pushing down, well, then we can going lower. Nobody knows. And that's what's so cool about using a triple moving average system. It kind of tells you when the worst is most likely, not definitely, but most likely behind us. So the fact that the uptrend ended here, well, that actually, in hindsight, look how significant that was. We haven't been able to get, if we drop here, I think we've got to be very careful. Just reading how it's saying he uses a 20 and a 200, and the 20 has crossed the 200. What is the point of the 3 MAs? So the 3 MAs just give an extra filter. So in other words, so if I use a 2 moving average here, so if I look out this orange, well then I would say, yeah, we're definitely in a bear. But I'm actually giving you the price benefit of the doubt here by using a third one, because we're not in a bearish formation with a third. So it really has a filtering effect that the trends have to prove themselves. But it's cautious on the upside or the downside, because once you fall out of that formation, you don't have to wait for all 3 to line up. You just need one to fall out of formation. So it's a more altered approach. It's like a confirmation. Exactly. So you're confirming the trend, and then you're confirming the break of the trend. So it's harder to confirm the trend, and it's easier to confirm a break of trend. Does that make sense? There's something else I wanted to just mention here. which we haven't looked at previously, and that would be the life cycle of an industry. It would be the life cycle of an industry, which we haven't mentioned before. I'm just thinking the best to do this. I'm going to bring up Microsoft Paint. All right, so what we have on the y-axis would be demand. And what we would have on the x-axis would be time. And this is very theoretical. It's the life stages of an industry, right? So you'd get something like this. Hang on a second. Let me do that again. So it would look something like this. Sorry, my machine's really slowed down. Let me try that once more. Let's do it this way. Okay, that looks better. Even higher. Okay, that looks good. All right, so this would be kind of the life stage of the various life stages of an industry. So you'd have something like this. This, and something like this. All right, so this is what we call embryonic. If I can spell it right, embryonic. I think it's like that. Is that right? You'll have to excuse my spelling. I don't know if that's right or wrong. Embryonic. Then you have something called the growth stage. This would be shakeout. This would be mature. And this would be the decline. All right, so and typically when we talk about the growth side of the market, we're talking about companies that are in this area, and when we're talking about sort of your mature companies or value, we're kind of talking about this area, right? So what happens is, well, where are we with Bitcoin? And I would suggest we're probably still in the growth stage, right? Or cryptos in general, probably still in the growth stage. Which then seems to indicate, well, there's probably 3 stages ahead of us. But there's a problem. I think there's an inherent problem with the crypto market, and that is the tension between regulation and no regulation. I think we're in a very, very interesting and important time now. And that is, we've gone into a tightening cycle, and we've looked at it. We've gone into a tightening cycle, and that tightening cycle is absolutely necessary because we've got an inflation problem. Okay, and the reason that we can go into a tighter monetary policy is because of this. Fiat money. So all the sort of fans of crypto say, well, that's fiat money is the biggest farce. You know, that's the exact reason why we need a crypto, because it's not regulated. It's disruptive. It's disruptive, like in that it's really making the economies rethink the way that they work. And I think everyone would probably agree with that. The problem is, well, yeah, the central banks aren't going to they're not going to give it a fiat money, because how are they going to run monetary policy? Imagine you didn't have monetary policy right now, and you've got 7% inflation and it's rising. Well, what you're going to do? So there's the whole point about cryptos is that we can maybe run the risk of these stages. Okay, we run the risk of these stages not even appearing. Those stages can go bang, quick. Okay, if the central banks decide it, and we can kind of hit that much quicker, much quicker. Fiat money is going nowhere, okay, because monetary policy is vital to economic function. So I don't know if we're going to hit the shake up. I don't know if we're going to hit the mature. I don't know if we're going to hit those stages. That's something that is a real threat to the crypto market, and it's a real threat. It can happen, within the next 12 months that it can be regulated. So the point is, that's something that we just got to be honest about. So we've got the threat of regulation. We've got the fact that dollar is now starting to move up. How's that going to affect Bitcoin? And all of these things need to be acknowledged, as well as the fact is we don't know how far down it's going to go, and we really don't know how far up it's going to go either. What we can do is we can only run with a trend. The trend hasn't fallen out just yet. It hasn't fallen out just yet, and that's a good thing on an analytical. But in order for this to, I think, clear up, well, we'll need to get this green moving average at least above the red, okay, then back above orange, and then crisis averted. No, but right now, here's the crack. Is it going to drop further? I want to stress, nobody knows. Okay, anybody that makes a forecast has made 1,000 of forecasts before, and I promise you, most of them have been wrong. So just keep that in mind. So we're just going to have to follow the trend. All right, it's been close to an hour, and Katie has asked for NASDAQ and S&P, so I just want to run through to NASDAQ and S&P very quickly. All right, so you can see the DAX is really fallen now, hasn't it? Wow, okay, so it's an S3 day. The way I think that we do this, Katie, is I'm going to just change this to another template. Let's just go through here to all right, so I think, Katie, the big idea here is where we positioned in terms of the zones. So we're in zone 3. You can see that we're falling heavily now on the hourly as well, right? And the stochastics moving into the 20 area. Take a look at the Bollinger's on the daily. They're starting to shoot apart. You see that? In other words, the volatility there is getting quite intense. We could have a real decline with this, if those Bollinger's have anything to say. So just be careful. It looks as if there is a downside bias here. And if we go through to NASDAQ, NASDAQ has already fallen heavy. It's also starting to show an expansion in the volatility even after such a heavy fall. That makes sense because the growth side of the market is much more sensitive to interest rates, much more sensitive. But they're both looking quite dire at the moment. Katie, does that help? Just let me know how it's just saying. So I could use the 20-200 and what other moving average. All right, so please don't take what I'm going to say as advice. I'm just going to tell you what John Murphy from Stock Charts use. So he uses a 20, he uses a 50, and he uses a 200. So if you want sort of more information, just go into sort of stockcharts.com, maybe even shoot them an email or something. Don Murphy is a doyen of technical analysis. He uses the 12, 50, 200. All right, I hope that helps. Let's conclude at this point, guys, and then I'm not sure if we'll have a US Open. I'm working still on this Outlook 2022. I'm behind. I've got to get cracking on it. All right, guys. Thank you very much for joining this morning, and we'll chat soon.